make sure you have a lender that knows the game, knows obviously, everything to be a lender, mortgage, dealing with real estate, all that type of stuff, but specifically that deals with self-employed people pretty often and just knows what they're talking about. Like if they're not mentioning things about your tax returns, what needs to be reported, all that type of like in-depth conversations, then that's your first flag that you need to find somebody else. Hey, what's going on, everybody? Welcome to the 9% Show. I'm your host, Steven Burton, and here at the 9%, y'all know we keep everything 100. If I haven't done it, not doing it, or not about to do it, it will not come out of my mouth. So welcome, everybody. Welcome to the 9% Show. Like we always do around this time, we give a toast to the 9%ers out there and those that would like to get into the 9% club. Shouts out to y'all out there. Shouts out to y'all. So today we are talking about buying a home as a self-employed business owner. And I'm thankful to say that I know this well. Okay, in 2020, my wife and I, we purchased our first home. And when I say 2020, the first thing that should come to mind is that we purchased it during COVID, which was very interesting, let's just say. It was very tough. And a lot that I'm going to talk about as far as like being prepared to buy a home as a business owner, we have a lot of different rules, but during them times, they was making even more rules. And I'm going to touch on that a little bit, like for what I had to go through, but I don't think it's as, some of those standards that they had at the time, I think they've done fell off by now. And but they created new rules, it was a wild time, very wild time. But yeah, so this, when you wanting to purchase a home is obviously a lot of people's biggest purchase they'll ever have in their life. And it was definitely a milestone moment for us and, my family. Honestly, one of the main reasons I started perfecttux and wanted to be an entrepreneur, start my business to get it to this level was honestly, I saw that the way I was going, the jobs that I had at the time and just how I was getting along in life, it was just going to take way too long. It was going to take way too long. And I've said this story in the past before, but I told myself I just got to go like this to go like this, versus just kind of slowly creeping along. And so that's kind of like what happened. So, and then I also live in California, in LA, and it is very expensive out here as well. So there was some moments where we thought we couldn't accomplish a home out here, but, thankfully, we were able to make that happen. But, just being real about this mortgage process, okay, and the application process, it is real out there, and it is a lot harder. And it's like if you are not a W-2 employee, it is not the same, okay? So we go talk about things that I went through and just steps that I can give that for anybody else that's if you own a business and you're trying to buy a home. Even honestly, you can apply a lot of this stuff to like purchasing a car, any type of loan you're trying to get. But a mortgage is just that. We're talking about a lot of money here. So the banks ain't messing around and things like that. So that's what we're going to talk about. So I'm going to give you like 5 tips, 5 topics we're going to talk about here. And we're going to get into the number 1. Okay, so the number 1 thing is get your docs ready. Okay, you need to know what you need to have. Okay, and the things most likely you're going to need to have for most lenders is 2 years of tax returns. Okay, so do understand that if you just started your business yesterday, it's not going to count. Or if you just started and you just got 1 year under your belt, it is not going to count. You might have some success if the business you started, you worked in that industry before starting it. So, because that could be considered like the same thing. Let's say, let's say you worked real estate and you worked for a company. And then as an agent, you decided to start your own practice or your own thing. And so you're still making money within that same industry. That might work out for you. I'm not saying it will, but that's just, those are things where you might need to talk to your lender and see what how that works out. But as far as a business owner, definitely you're going to need to show 2 years worth of tax returns. Usually they're averaging out your income there or what you make, but that's pretty much how you show your income is going to be on these tax returns. Your bank statements, You're going to have to prepare to show, at least two to 3 months worth of bank statements. You're going to need to have, your P&L, your profit and loss statement. They want to know that your business is in good health and good strength. A wild thing that was going on when I bought the home during COVID was usually you're just your 2 years tax return, and that's really, kind of all they needed. What was wild about that particular time, so this was like literally the shutdown happened. The crazy thing about it is we signed a contract for a new build home in January. COVID happened in March, like everything shut down. And then so our home wasn't ready till like, I think June our home wasn't ready till June. But during that time, like they didn't, my 2 years worth of tax returns, it was exactly what we need. We'll talk more about, being prepared for that. But like, it was exactly what I needed. But, during that time, they were like, you know what? Yeah, we know what you made last year and the year before and all this type of stuff, and everything is great. But we need to see this current year that you're making the same level of money that you say on your application. And I was just like, you do know there's a pandemic and not one event going on in America. How I'm going, it was really crazy. Like they was on some wild and out stuff. I mean, I can't blame them because everybody thought the world was coming to an end. But yeah, so that was very crazy. And honestly, the only thing that got us by that is that we shifted to selling masks and all type of stuff as far as like what they call that, PPE or whatever, protective stuff. I forgot. COVID is long gone, so we ain't got to worry about the terms no more. But selling masks and things like that. Honestly, it brought in enough revenue to show the lender that the business was operable. And almost to the level of what we would normally be doing. So honestly, that was like the only thing that saved me. It was some wild times, but you won't have to worry about that, like showing what you're doing in this exact moment. Hopefully not. I mean, I can't see that still being the case, but that was a big twist that I was not prepared for to have to show. But like, that's what we had to do. But really having all your documents in order, being ready, knowing what they're going to request from you. And like I said, the main thing is your 2 years of tax return, because you definitely need that. Part of this thing, so we're going to talk about number 2, and it's also part of kind of like planning ahead with your documents and everything like that, but it's choosing the right lender, okay? For me, I picked a lender that had worked with self-employed people before. He was very well. I got referred to him. I mean, one of our first conversations. Honestly, we had him he was a broker, but so meaning he could get different loan types for different places. So I didn't just go to. I mean, we end up getting quotes and estimates from different banks and things like that. But we always knew, at least I always knew, he was going to be our main source. But like we talked. We was in communication for maybe 2 to 3 years. When I first, got referred to him, because sometimes this home buying process can be a long process. You could just be looking, things don't work out. You realize maybe you need more money or you can't afford what you're trying to look at. You need to save up a little more down payment. So it can take some time. But it's important to choose the right lender, to get you a lender that works with self-employed people. I remember one of our first conversations with the lender, like he made me just feel at ease, like saying, oh yeah, I understand you got your tax returns. Have you turned in your tax returns yet? No, send them to me before you send them to the IRS. Like them type of conversations. I was able to talk to him. He was able to tell me exactly where my income needed to be on my tax return. Like having that type of conversation with them, I was like, okay, this is our credit scores. This is how much money my wife makes. Okay, I could do, my money could be this, it could be that. So he's like, based on this home that you guys want or this price range, we need your books to say this. And so having somebody that understands that, and then also that was willing to like be involved during the whole process. Like when it was time to do tax returns, I showed it to him first and let him sign off on it. And he was like, okay, that's cool. Whoop de whoop. If he would have been like, okay, no, we need at least $5,000 more to show in here, we might have had to finagle a couple things. Not saying that you're doing anything fraud. I'm not saying that. But as a write-offs, all type of stuff, you can structure things all type of ways. It's just the benefits of being a business owner. But make sure you have a lender that knows the game, knows obviously, everything to be a lender, mortgage, dealing with real estate, all that type of stuff, but specifically that deals with self-employed people pretty often and just knows what they're talking about. Like if they're not mentioning things about your tax returns, what needs to be reported, all that type of like in-depth conversations, then that's your first flag that you need to find somebody else. So my lender was great. He was amazing. And like I said, the whole way through, he just any questions I had, I could just reach out to him. He wasn't pushy, wasn't getting frustrated with us. Like, it was a couple years that went by, but we stayed with him, and, he ended up getting our mortgage through the final steps of it. So that was great. Another thing that you're going to have to realize is that your credit scores matter even more when you're self-employed. Okay. Self-employed people we are red flags. Okay. We are the most, we are not consistent. Okay. We are very, uncertainty is certain in our world. Okay. So that's more risk for these banks. Okay. Some lenders like to see a FICO score like 700 and plus just from the jump. I mean, for me, I had a, co-mortgage with my wife. So it was a little different. Obviously they take the average of both, they call it the middle score. I ain't gonna dive into all mortgages, but you got 3 credit bureaus, 3 credit FICO scores. They drop the lowest one, drop the highest one. They take your middle one. They do the same thing with your spouse. And then they take whoever's higher. No, they take whoever's lower. And that's who they base that stuff on. So that's what happened in my situation. But I can only bet if it was purely me and my income all dependent on a business, I best believe, I had good credit. So it really wasn't going to make a difference. But just know that if you are self-employed, you need to work even harder. So again, those are conversations that you have with your lender. Like, what's my credit score? What's the FICO need to be? The whole thing you need to start preparing with your lender. It is very important. You don't want any surprises. You want to control your destiny on all this type of stuff. Okay. The next thing we're going to talk about, the next thing that happened is understanding that business write-offs can hurt your application. Okay. I talked about having your docs and your tax returns ready. The reason why is because you need to show you make money. Okay, they're basing that you could pay this mortgage. Also, your affordability, what you can afford. They're gonna give you a max that you could afford, and it's all gonna be based on that bottom line number. If you just said, "Oh yeah, I spent $20,000 at the restaurants," write that off. My business lunch, write that off. That's $20,000 that could have went to your profit. Okay, that could have made a difference. So understand that all those write-offs, and this is why you have to plan ahead as a business owner, as a self-employed person. You need to start saying, you know what? Okay, I plan on buying a house next year, maybe in 2 years. So you need to know, okay, well, I need to make as much income as possible, or whatever that magic number is that, again, hopefully you'll be in conversation with your lender to know that, but you need to hit that number. You also need to realize that they also take an average of those 2 years of tax returns. They're not saying, oh, you had a really great year this year. Maybe the year before was a really bad year. They're going to take the average between those numbers. So they're not just going to go off of what you just made last year. So let's say you had a bad 2 years ago. Then you might need to wait another 2 years so that good one and you get another one. But it's like, it's also about just structuring what's going on. I remember come November, December, I was in tune with my lender at that point. I was like, okay, where are we at? I was in tune with my bookkeeper. She knew that I was going to, be applying for application. So there might have been some bills and some expenses that I had to wait till January 1st to get on the books, because I needed my numbers to show a certain amount of money. Okay. So understand that all the write-offs, all the things that you normally would do during this point in time, you need to show as much money as you can at your bottom line, your number, your profit, your profitability of your business, because that's what they're banking all this stuff on. Also, another thing I'll say, just along these lines of just, the application and everything, do understand, I probably should have mentioned this earlier with the bank statements, but you need to be strategic with your deposit money. If you're, let's say, Sometimes as a business owner, you don't want everybody in your business. And you don't want everybody in your business. Like, you got your things separated for your business. You got your business checking account, you got your personal check account. Understand, okay? If you put your deposit money, let's say your deposit money is in your business account, and you go ahead and transfer or deposit this big old lump sum in your personal account, and let's say it's within 2 to 3 months, you're going to give them your personal bank statements, but they're going to want to know where that lump sum of money came from. And guess where it came from? Your business tax returns. Your business bank statements. So for your business checking, they're going to say, hey, you know what? We need checkings from your business checking account too. And, let's just say you had a business loan or something going on over there. They're going to be like, well, hold on. Is this your money? Is this the business loan money? Did you just take a loan and transfer it over here? Hey, I'm not saying nothing, but you got to understand that those 2-3 months, you need to let that money sit there a little bit in your personal checking account. Okay, that's just a little strategy there. Because if you do not, best believe it is all in your business for any other checking account that you have. Okay, so that's just a little bonus thing there. But understanding what they're looking for, what documents they're looking for, what your credit score needs to be, like all of this plays in. And like, I can't stress about the lender as much as I need. Like, I didn't know all this stuff. It was the lender that put me on game. I definitely did some of my research about the bank statements and things like that, because at that time it was definitely rough. And like, even during that time, it was like PPP loans and everything else going on. So I didn't want to have like conflict of interest or where they thought this money came from or whatever. It was just it was a wild time. But being strategic, I would say the great thing about being self-employed, about being a business owner and during this mortgage process, again, with like other loans that I speak about on this show all the time, we just have a lot more flexibility. Okay. A regular W-2 person, this is what I made, point blank period. That's it. Like, now for us, it's like, well, shoot, move this over here, put this number over there, put this expense over there, don't pay that until next month. We have flexibility. So, but with all that being said, they know you got flexibility, so they go be in your books a little bit tougher. So just make sure everything is lined up, okay? The fifth and last thing is more like a bonus tip, okay? And it was a strategy that I use, but you should structure your mortgage to match your income trends in your business. What worked for me, and I don't know if a lot of people know that you can do this. So a lot of times when you get a mortgage, you also, if it's less than 20% that you're putting down, a lot of times they require that you have an escrow with it for your property tax and your homeowner's insurance. Like it's pretty much it's lumped in with your mortgage payment, your principal and interest. So you're paying that, and then the bank or the lender pays your property tax and your insurance on your behalf. And for me, I was like, you know what? I can pay my own bills, okay? I don't need nobody just babysitting my money and letting you get interest on it and doing all this type of stuff. But for me, again, in conversation with my lender, I found out that there was loan programs that I didn't have to do. I could get a mortgage without an escrow for a 5% down. I wouldn't have known that if I didn't ask and, have these conversations with my lender. But I chose that because it made my mortgage payment just principal and interest, right? And then I knew the timing for property tax in LA. It was during the times where it's like my peak season. And so what I wanted to do was set up better cash flow for myself. If I have a slow month, if I have whatever, I don't have to want to lift so heavy to have to worry about the mortgage and property tax on top of that. I wanted to be able to if I need to recoup the money, down the line, I just wanted ultimate flexibility. So based on the seasonality of my business and how things was working for me, I wanted to have that flexibility there without having to tie in the escrow. So, but the good thing about having a broker as a lender, he was able to find a loan program that had that. And it just worked out perfect for us. Just really worked out perfect. So that's pretty much the process there. I mean, I can't, it's kind of like a quick video on this, but that's really the kind of the main things. And I think the biggest takeaway, like I said, is that you just need to prep early and find you a lender that knows self-employed business owners, because that will determine how you want to move and operate. Because you do have that flexibility, but you also don't want to do something that's going to mess you up. Because the thing that sucks about it, let's say you mess up on your tax return, you got to wait a whole nother year. You might have been ready to bust a move on something. So it's very important that you start, if buying a home is anywhere on your radar, I'm talking about it could be 5 years down the line, like wherever you see it, start thinking about it. Okay. Start having these conversations. Trust me, lenders, agents, they have clients all the time that take a long time to buy a house, because it's a long play. So trust me, you don't got to feel awkward by saying, oh, I'm not ready right now, I just got questions. If they got problems with them questions, you need to find another lender. Okay. So, hey, have you ever bought a house as a business owner? If so, if you got some tips, hey, put it in the comments. I want to know about it. Maybe some other people want to know about it too. Please share this video if it was very impactful for you. I hope so. Until next time, I will catch you on the 9% show. Peace.